Hey guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about how to find stocks for swing trading. So I hope you guys all enjoy it. If you guys are new to the channel, my name is Carter. I've been a full-time swing trader in the stock market for 6 years. And with that being said, we do have a fantastic school where you guys can learn how to find plays, the scanners we use, strategies, the mindset, the strategies with the trader, everything you guys need to get started. It's absolutely fantastic. And right now, we're doing the Memorial Day sale. The last day is going to be tomorrow, so make sure you guys check it out. Code Memorial for 50% off the school. It's absolutely fantastic. Private live streams, quizzes, lectures, everything you guys need to get started when it comes with swing trading and trading in the stock market. So check it out down below. But guys, let's jump into this here. So when it comes to swing trading, what type of companies do you trade? Do you just trade any old random company you see? No. When I first started trading, I actually was a day trader, surprisingly, a long time ago. But what I would actually do is just pretty much trade random companies. Now, this was a recipe for disaster because sometimes when you buy a position, it goes up. Sometimes when you buy it, it goes down. Now, I'm buying at the time, very, very talked about companies, stocks that I would see on Reddit or YouTube. And most of the time, those are kind of like some pump and dump type of stocks. So, obviously, I had no idea what I was doing. And I soon realized I need to figure it out because I was losing money. So, with swing trading and trading in the markets, you guys are going to need a scanner. Now, a scanner is a way where you guys can implement, criteria in it, so it will filter all the stocks that meet it. Those are super important. The ones I would recommend are Finvest. They're absolutely fantastic, and Moomoo. I'll put them both down below because they're awesome. Both of them are free. Moomoo is actually a stockbroker and going to be the broker that we're going to be using today. So let's kind of look at some companies and seeing if they're swing trade material here. So one of the stocks here that I do want to show you is GameStop. So looking at GameStop, this has been a very, very talked about stock this past couple of weeks, just because of the volatility where the stock has gone from $16 to $64. Now, looking at this, you might say, well, Carter, this is a great play. This stock is squeezing up. Everything looks good. No, don't trade companies like GameStop. At least for my strategy, I would never touch these types of plays, these types of meme stocks, these types of, companies. And yeah, you can make money off them. I'm not saying you can't, but they're way too volatile. If we look at like the hourly chart, you guys will be able to see just how rapid this type of stock is. It's gone from $17 to $80 in less than 2 days. Just as fast as it went from 80 all the way back down to 19 in the matter of 1, 2, 3, 4 days. So these stocks are going to be very, very, very volatile, very, very risky to trade. And for me and my strategies, I would not touch it. Now, let's look at another play here that, in my opinion, does carry some sort of opportunity here. Now, this is Amazon. Now, one of the reasons looking at Amazon, you guys may look at it and go, well, Carter has an upward trend, right? The stock has gone from $18 to $91 in the matter of about a year. So we know there's a good amount of buying pressure behind it, which is always really good. Because if you buy a stock that's on a downward trend, there's more sellers than buyers in most cases. So with Amazon, it's very, very well established. It's a blue chip stock, as well as there's going to be a lot of great indicators you guys can use to determine if you should buy this position. Now, some of them that I want to talk about is going to be the 90-day moving average line, the 200-day moving average line, and then the RSI line. Now, the 90-day moving average line pretty much is a trend indicator, so you can look at it, instantly know the direction of the stock. And the other reason that a lot of traders use it, like myself, is they act as support and resistance. So what that means is support is just where we get a lot of buying pressure at. So you guys can see it hits it once, twice, 3 times. Getting good buying pressure when the stock is above it, right? Hits the 200-day moving average line several times. So now looking at this, where would you want to buy this position? Would you want to buy it when it's overextended all the way up here? No, you want to buy it as close as you can to these moving average lines because you know there's a lot of good support there. Another indicator we use, we have that 90-day moving average line. We also use the 200-day moving average line. So like I talked about, support is where we get buying pressure. When the stock is below it, we've also seen tendencies of resistance. So resistance is just the opposite of support. It's selling pressure. So you guys can see when the stock is below it, it gets good selling pressure. So now looking at it, you want the stock above these moving average lines where you can get them at support lines, right? So you guys can see it hits it several times, getting that good amount of buying pressure there. Now, another indicator that I love is going to be the RSI line. The RSI stands for the Relative Strength Index. What this type of indicator is used for is trend momentum. So historically, anytime Amazon is under about a 30 on that RSI, it's considered undervalued. So let's look back and look at what type of RSI lines we have. So as of right now, the RSI is at about a 23, which historically for Amazon is a pretty undervalued point for this stock. So looking back at the last time it was at a 22 was right here where we had this good move, from $75 to 91. We also all the way back in here where the stock went from 144 to 157, all the way back in here where we had a lot of great moves. So looking back at Amazon, especially with an undervalued RSI, we know there's good buying pressure. The last thing that I want to talk about is going to be risk and reward. Anytime you trade, you always want to make sure you have a good risk and reward. You want to make sure you're risking $1 to make, $2, $3, and sometimes more in some cases here. So if we hopped in near and around this 90-day moving average line and we set our stop loss just below it, so the max amount of money we're willing to lose, and then where is going to be the profit or our target? So our target is actually going to be the resistance lines. So you guys can see it hits that red line, has good sell off. So that is going to be our target, also the resistance. So right now we're risking $1 to make $3.09. And this is just with the stop loss, just about 2% down from its current price, which would be a very, very good risk and reward. So now when you start looking for stocks with opportunities in your scanners, you're going to be wanting to find plays that are on the moving average lines. Now you also can use a lot of good trends. You guys can also see that looking at Amazon stock, it does have some nice trends there as well. So we have good trend lines, we have a moving average line, we also have some resistance lines like that. So we have good buying pressure, and this is just a very, very basic thing that you guys can look for finding stocks with opportunity. So guys, I hope you guys all enjoyed this. If you guys have any questions, feel free to ask down below. Don't trade any old random companies. Find stocks with some sort of play, some sort of opportunity, rather than just trading random stocks. So guys, check it out down below. Check out my scanners I use. You guys can use code MEMORIAL to get 50% off the school. But guys, we'll see you guys in there. Like, subscribe, and I hope you guys have a fantastic rest of your day, and take care, guys.